Well, oil's making a recovery, 62.50. But the index is not so much. NASDAQ's down 2%. S&P's down 1 point. It's hard to see on this thing, so let me get the other one. FinBiz. I like FinBiz. Futures. All right, important thing. The futures are not the same as the indexes, of course. The futures are out to the end of the quarter. So in other words, right now we're looking at the June 30th futures. And so that means that this is where people are betting that the index will be on June 30th. So in reality, the S&P is at, oh, that is the S&P futures. Let's go to stock chart, see if we can find that. Oh, well, I can look on the CNBC. If it comes around. Unfortunately, it doesn't come up on demand. All right, the Russell is 1871. There's a good example. So the Russell is 1871. But the RT, the Russell futures are 1878. Not a big difference, but it's not the same number. You just always have to keep that in mind. As you get closer and closer to the end of the quarter, the futures and the actual index tend to line up, obviously, because there's no speculation that it's going to move much off of where it is. Oh, we got Powell coming up at in 30 minutes, 25 minutes. So anyway, so when you look at the futures, you have to get used to that. Also, it's so confusing whether you're looking at the NASDAQ 100 or the NASDAQ regular. CNBC uses a regular NASDAQ, which is 16,500-ish, not 18.5. The NASDAQ, once you get past the NASDAQ 100, you're pretty much looking at the same kind of stocks as the Russell 2000 or the S&P. There's those fill out the rest of the NASDAQ. So I much prefer to look at the NASDAQ 100, which tells you what the big stocks are doing. I mean, they're simply the 100 most in market cap size of the NASDAQ. But the other problem with the NASDAQ, of course, is that there's now the Magnificent Seven, or really, I wouldn't count Tesla in that group. But there's 6 stocks that are roughly $3 trillion each, which is $18 trillion, which is half of the entire NASDAQ's market cap. So really, that's a whole different thing. And then we have the Magnificent Seven Index, MAGS is the ETF for the Magnificent Seven. And that can show you how they're doing. So the Magnificent Seven is down from 55 to 43. That's way worse than it. Well, obviously they're having a bad day. So you see they're down 2.7%, dragged down by NVIDIA. But basically it's down 12 divided by 55. So they're down 21.8% as a group. All right, so they're performing worse than the NASDAQ. They were further down though, so they're still in what, a weak bounce. And by the way, well, this is 58 actually. It's even worse. It's 58. I'm sorry. So 58 to 43 is 15. 15 divided by 58 is 25.8%. Wow. And they were down about 30%. So if we calculate from here, here's 40, right? This is where they found a base. All right. And I don't go, when you're doing the 5% rule, you don't go spike to spike. You go where they finally form a base. And there's also over here, we also bounced off the 40 line. And again, you could argue that it was really the 39 line. But, when you hit something for one day, it doesn't really count. You got to throw that out. If you recover in a day, because we didn't even close there, right? And we didn't close there here either. So we use the 40 line. So 2 things about picking a line is you want to pick a round number line, and you don't want to pick a line that's only been tested intraday. That's silly. So here we are at 40. And we said we fell from 58. Did we really fall from 58? Nah, we really kind of fell from like, this was never really held for any kind of time. This seems like a more solid fall. So 56, I would go 56 to 40. And 16 divided by 56 is 28%, and 16 divided by 40 is 40%. Ooh, I like that. That makes a lot of sense then. So definitely we want to use this 56 line because it's 40% up from 40. And that means that since it's 16 points, am I right? Yes, 16 points, we divide it by 5, and that's 3.2. So basically, every 3.2 points is a bounce line. So that means we go 40, and what would be a weak bounce? Oh, look at that. It's 43.20 is a weak bounce. And that's right where we are right now. We're at the weak bounce line. What's the next bounce line? 320 plus 43.20 is 46.40. 40. All right, and notice, look how well it lines up. Can you see that? I'm pointing with my finger. I don't think anybody can see my finger. But it lines up there. And if we go left, it's annoying because it moves when I do that. If we go left, you can see how 46.40, oh, let's get that calculator out of here. So 46.40 was a thing over here also. So that's a nice consolidation. That lasted a month, more than a month, right, at 46.40. So that's a real line. That's what we call the strong bounce line. We have the weak bounce line here and the strong bounce line here. And now we add another 320 to 46.40. And that's 70 and 49.70. Call it 50 though. At that point, you're better off rounding it up to the $50 line. And the $50 line again, obviously, but look at the significant points here. Here's the $50 line, significant rejection there. Here's the $50 line, rejection here. $50 line here, breakout, support, went up. On the $50 line here, consolidation, fall, and then rejection. So what that indicates to us is that the 5% rule is very much in effect on this particular, on the Magnificent Seven. And what that means is that you can count on it to probably in the future continue meandering along those lines. And by the way, since we are what was it, 46.40? So since we're basically failing at the weak bounce line, we were above it, but we're no longer above it, and now the 46.40 line is pretty much acting as a resistance point. It means that we're very possibly consolidating for a move lower, especially when you consider this ugly thing, which is a mini death cross where the 50-day moving average is coming below. Is this a daily? Yeah. So the 50-day moving average, not a mini death cross, it's a death cross. The 50-day is coming below the 200. So there's the 200. There's the 50. It made a death cross. And that means there's going to be a lot of downward pressure. And also, where did we get rejected? The 20-day moving average was where we got rejected as well. So every technical is lining up against us here. It's very, very ugly. All right. That brings us to a problem, which is as I'm reviewing our portfolios, we don't have a lot of positions in the Magnificent Seven or in any kind of tech. We have a little because we were worried that we were missing out, and it turns out we weren't missing out at all. But we don't really have a lot of tech, so that's not an issue. But it's dragging down the whole market. Look, it's down 3% today in one day, 3%. So even though we like our stocks and we've got good solid positions in our portfolios, you know, we're down, you know, 20% plus from last month in our portfolios and in some of the long portfolios. And you've got to say, do we even want to risk another month like that? Is it worth it? Is it worth the risk? And I said this before back on March 7th when we cashed out. And I said the only way you should be sticking with these positions is if you've got a lot of offsetting hedges. We have a shitload of, we have so many hedges that we're technically bearish. We actually make more money going down than we make going up. So if you have the hedges, that's great, because the idea was we would have lessons on rebuilding a portfolio after a crash. We knew there was going to be a crash. That wasn't a question. You know, we knew for sure there was going to be a crash. Go back to the webinar around March 7th, and that's all we were talking about, was that there's going to be a pullback. It's going to be at least 20% in the market, and possibly as much as 40%. We're only at the 20% point right now. So the only reason to hold positions, which were going to go down 40%, was we intended to rebuild them. We cashed about 1/3 of our positions. We bought some back too early on March 24th. We did a lot of buybacks because we thought maybe that would hold. And we thought that would hold because Trump at that time was pausing tariffs and blah, blah, blah. Then came April, whatever, and he put on more tariffs so harshly. He didn't just put back the tariffs that he paused on March, whenever it was, in early February. In early February, he put on some tariffs, like 25% on Mexico and Canada, 30%, whatever, and this and that on a couple other countries. He didn't just put those back on. He put tariffs on every single country on earth at double, triple, quadruple what he said he was doing on February 7th. So, you know, the pause that we digested between February 7th and March, when he started when he was going to put the tariffs back on, Liberation Day, whatever they call it, we didn't think he was going to then come back with a vengeance and start tariffing the crap out of the entire planet. That's again changed the situation. So still, because we were so bearishly hedged, and because our short-term portfolio made like $1 million in the month, it offset all the losses from our long portfolios. But again, if you're not in that position, don't just go by our long portfolios, because our long portfolios have a short-term portfolio backing them up with the hedges. And this is not the kind of damage that's going to be easily recoverable. Oh, the Nasdaq's down almost 400 points now. This is not the kind of damage that you're going to come back from, because unless Trump drastically again changes his mind, and again, I was writing this in the member chat just before, even if he does, you still have to deal with the fact that he's destroyed America's reputation as a reliable trading partner. And you guys have all heard this concept, right? That a reputation takes years to build, but a day to destroy. That's what we have here. We have a reputation of trade and being reliable, and the fact that you can, and here's the other thing, the fact that when you are a trading partner with a United States company, what you count on is the US courts to be consistent and to back you up. That if you sign a contract in good faith with an American company under the jurisdiction of the US courts, that you will be treated according to decades of case law, that your lawyers can assure you that you have signed a valid contract and these are the terms, and this is how the courts generally interpret the terms of such a contract, right? By upending the legal system and changing the law and changing the regulations, so now your contracts are not worth the paper that they're written on. And that's exactly why we don't like to do business in China, and we don't like to do business in Russia or other authoritarian regimes, because you can't count on them to keep their word. That's what we've become. And whether Trump reverses it or not, the fact that everybody looks at us now as a country where one guy can get elected in a surprise and come to power and just start saying, I'm throwing this out, I'm throwing that out, you're banned, you're not allowed, you're my favorite, blah, 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 then how do you make a commitment today to build $200 billion worth of factories in Ohio when you don't even know if Trump could actually like kick you out? He can actually just say, oh, no, sorry. Thanks, Micron, for putting $200 billion into the factory, but now we're going to throw you out of the country. Well, not Micron. Micron's actually US. But, well, hopefully not Micron. Who knows? You don't even know that he won't throw out US companies. You know, because maybe they talked to China. Maybe they gave chips to Taiwan and the chips from Taiwan went to China, or whatever the excuse is, obviously. He's withholding $2 billion from Harvard over their DEI policies. They are, Harvard argues that they're allowed to have their own policies, and Trump is saying, no, you're not. You have to have the policies I want you to have. Otherwise, we will take away all of the grant money that you earned over the years, that you competed for, you did this and that, you went through the hoops, whatever you did, but you had $2 billion worth of grant money, and I'm just going to cancel it now. Even though you already hired the professors, you already built the labs, you already purchased the equipment, it's the same thing. It's a contract. The U.S. government said, we will give you this much money to research, better, plant-based materials for beef substitutes or whatever. And they said, sure, we're going to do this. We're going to make a study. We're going to build a team. We're going to put labs inside. We're going to get a building built. We're going to have all this stuff and buy all this equipment and set up places to grow things and get some farms upstate in Massachusetts. That, it's not like a whim. And the same thing goes when they flip these contracts. Lockheed Martin was going to get this contract for the new fighter plane because they built the F-35. They already had all the stuff, and they were ready to build the next generation plane. And then Boeing said, "Oh, you know what? We're going to name it F-47 after you, Mr. Trump, if you give us the contract." And boom, they got the contract. Boeing with their much less than stellar safety record. Boeing, who stranded the astronauts up at the space station. Boeing, who's got doors popping off their planes and so on and so forth. Boeing is the one. Boeing, who still can't get their frickin' 737 right. Boeing got the contract instead of Lockheed Martin. Now, F-35 certainly had its problems too. But you know what? It's the most popular military item in the world. Everybody wants it. The only reason Lockheed Martin isn't selling more of them is because we're restricting who can get an F-35. Everybody wants the F-35. As much as you hear bad stuff about it, it outperforms every other plane that's out there right now. And there is no reason they shouldn't have gotten that contract. But in fact, LMT, and it's $20 billion a year. It's a lot of money. Now, not going to kill Lockheed Martin, of course, but I think that's when they didn't get the contract. I think that was the day. And they're back because in the grand scheme of things, they don't give a crap. But you don't want to see that. And Lockheed Martin's on sale. We love Lockheed Martin. Lockheed Martin is our stock of the century. And as you can see, it's been a good century. How far back can we go? Yeah, so in 2000, they were $20, and we named them our stock of the century, and they're now at 482. So it's been a good century so far, and we're only a quarter of the way through it. And again, it's the same concept as the stock of the year. We're not picking a stock that's going to outperform every other stock. We're picking a stock that is most likely to gain our goal. In this case, our goal was to find a stock that would gain 100 times. So our goal for Lockheed Martin is 2,000 by the end of the century. So you can still get 3 times if you come in now. But yeah, I mean, even here it was $100 a share. I mean, it's so in other words, what I'm saying is in the next 75 years, it's going to go up as much as it's gone up in the last 10 years. That's our bet for Lockheed Martin. All right. And why? Obviously, they're a key defense contractor, and not just for the U.S., but for all of our allies. But Trump's screwing that up. Trump's screwing it up with our allies. We're getting out of NATO. We're no longer in the alliance, and they may tend to move more towards European companies that they can trust, and not Lockheed Martin, who Trump can snap his fingers. And when I say Trump, I mean any U.S. president. He's setting precedents that any U.S. president can just snap their fingers and say they don't get planes. This one gets planes, that one doesn't get planes, this one gets planes. There's no law or logic. You can't appeal to the courts. It's whatever our commander-in-chief decides at the moment is okay. That's what they mean when they talk about the rule of law being challenged in America. And that's what they mean when they say we have a constitutional crisis. There's supposed to be a system of checks and balances. The whole point of our democracy is there are 3 equal branches of government. There is the office of the president, there is the Congress, who supposedly controls the spending, so the president can't arbitrarily make decisions and spend money or collect money, such as tariffs, without being authorized by Congress. And then there are the courts, who are supposed to be objective and deciding on any disputes between the president and Congress, or the president and any citizen who has the same rights as the president of the United States. The whole country is based on the fact that the president is a citizen who has the same rights, or as little rights, as any other citizen, and is subject to the same laws and decisions of the courts as any other citizen. That's obviously completely out the window. And as noted in the Jon Stewart thing today, wherever it went. Here we go. Are you kidding me? This thing's telling me we need to restart the computer again? How often can you have to restart a computer? So, as noted very well by Jon Stewart here, we are now an authoritarian regime. This guy is effectively a dictator. He does all the things dictators do. This is not a constitutional democracy at the moment. And the problem with that is that usually dictators run third world countries. And you say, oh, well, what about Putin? Russia is essentially a third world country. Russia has a GDP of, I want to say 150 billion, but that sounds insane, doesn't it? No, 1.5 trillion? Russia GDP. Yeah, that sounds more right. Russia GDP. 2 trillion. There you go. So Russia's GDP is $2 trillion, 1/10 of our GDP. So Canada is $2 trillion. So Canada and Russia are the same size as far as economies go. Germany, $4.5 trillion, much bigger than Russia or Canada. And Russia has, I believe, like 150 million people or something like that. Russia. Yep, 140 million people. So they lost a few in the Ukraine, right? So Russia's got 143 million people, yet Canada has 40 million people, and Canada and Russia have the same GDP. 140 million people, 40 million people. So Russia is essentially a third world country. It's on a GDP per capita basis, They're coming in around a quarter of what we have. So figure $20,000 per household would be their average income. Whereas Canada, more like $50,000 per household. Well, actually, well, let's see. How many Canadians did we say there were? 40? So 2.142 million billion trillion divided by, well, it's 40 million people, but that would be, let's call it 16 million households. Oh, 133,000. Yeah, so 133,000 per household, which is, way more than Russia. So, and that goes back to the same thing. I think if you remember, Reagan technically won the Cold War by bankrupting Russia. As stupid as that Star Wars thing was, and as stupid as the arms race was, trying to keep up with us bankrupted Russia. They put all of their capital into weapon systems and defense systems and submarines and things like that all over the world, trying to keep up with us when we had 10 times their GDP. We spent their entire GDP on defense, and they were trying to keep up with us. And think of how unproductive all those goods are in the economy. Oh, wait, Powell coming. Sorry, hang on.
Jay Powell, in his speech in Chicago, will say the Fed's obligation is to keep one-time price increases from tariffs from becoming an ongoing inflation problem. We very much echo the
I have a huge issue. I'm pausing it. I have a huge issue with this from the beginning. Powell is saying apparently that, and I guess he's got a copy of the speech because there's no Powell here, but Powell is saying at the Economic Club of Chicago, and this was not scheduled at the beginning of the week, so this is coming in to try to save the disaster we have going on. So Powell is saying that the Fed is ready to act to control to minimize the damage from the one-time effect of the tariffs. But this is the idiocy about talking about inflation like this, because it's not a one-time effect. You're raising the price of things 25%, and they're not coming back down. And just because you only raised the tariff once, right? So now, basically, look, if your Toyota was $40,000 and now it's $50,000, and and the groceries go up and this and that goes up, what happens next? Just so 6 months later, if they say there was zero inflation because we're still, we just had the 25% from the tariffs and nothing else, that what's going to happen in between over that 6 months? Everybody needs a raise. People are going to demand more money for their labor because they can't afford to live. You don't get paid, although money is a universal exchange, right? We used to trade seashells and beads, or chickens or hogs and hens and whatever. People used to barter, and money replaced the barter system. But the concept of barter means, I raise chickens, and I can raise this many chickens, and my chickens have value because I need other stuff. So I'm willing to give you, one chicken for the doctor, for looking at us for healthcare. I'm willing to give 2 chickens to the milkman for, not 2 chickens, but whatever, 2 chickens to the milkman for a cow, let's say, or whatever, 3 chickens for a cow. There were things that people would say, well, it takes me this much effort to do this thing. Whether it's a horseshoe maker who says, I'll shoe your horse, but you're going to have to bring me 8 chickens or whatever the number is, you know, or you have to bring me a cow. And then the guy says, a cow for 4 horseshoes? That's crazy. And he goes, all right, bring me half a cow, kill it. I don't care. That's going to be enough meat because for the guy who's making the horseshoes, that's enough food for the winter. Half a cow is fine. Feeds his family for the winter. And he had to sit there for 2 days making horseshoes. That's worth it for him. And it all works out. Barter systems, they work out eventually. Everybody figures out what things are worth by trading back and forth. Money is no different. Money is just something you barter for. Money is something where you say, I'm exchanging my services. I'm exchanging my labor for money. And the money buys the chicken and the cow and the horseshoes and whatever. You're exchanging your labor for the thing you want. So changing the value or the price of the thing you want does not make it okay. You have to reassess your situation and say, I can no longer accept this few dollars in exchange for this much of my labor. I can't do that. And as I pointed out before, we've already devalued the dollar during the glorious presidency of our dear leader. We have devalued the dollar. I'm trying to be nice. From 110 to under 100. We've devalued the dollar by 10%. So the dollars you're getting now in exchange for your labor have 10% less buying power than they did a few months ago. And it takes a while for people to start realizing this. Technically, in other words, if you were a commodity, if you were actually a commodity, not just your labor being a commodity, but if you were a commodity sitting on the exchange, you would be commanding 10% more dollars than you were 3 months ago because you haven't changed. Your labor output hasn't changed. You, as an economic unit, were collecting $100 3 months ago, and now, since a dollar is worth $90, you need to collect $110 to keep up with the deflation of the dollar, the devaluation of the dollar. And if you don't do that, then the problem is that when you go to exchange the dollars you're being paid for, well, because the economy is collapsing, it's a little tricky to look at it that way, but let's say metals. So when you would like to buy some gold, the gold is 20% more expensive. The silver is, what's that, 10%. Silver is 10% more expensive. Platinum is a little bit more expensive. Copper is quite a bit more expensive. What is that, about 10% more expensive. Palladium, not doing so great. But there are things that when you're trading, you go to do your trade. See, cows are more money, cattle's more money, hogs are more money. You know why? Because unlike a hog, you are not traded as a commodity. Your labor isn't treated as a valuable commodity. That's the joke of this system. This system devalues your labor. This system treats you like crap. How about grains? How are grains doing? His corn's up a little bit, soybeans up a little bit, soybean meal's down, oats flat, rice, but this is due to the economic slowdown. This is due to the economy slowing down more than anything else. So cows are coming out of this okay. They're getting paid their worth. If you're a cow, you can feel good about yourself. So, but the point being that the dollar is being devalued. It also means that your home, if you think your home is steady at $500,000, the problem is $500,000 only buys $450,000 worth of stuff now. So you may think your home is holding its value, but it lost 10%. Unless it went up 10% in price, it lost 10% in value. And that goes for your 401k too. Your 401k may say $2 million, or although I'm sure you took a loss in the market, but you may have had $2 million when Trump took office, and now your 401k says $1.6 million, right? About a 20% loss. So now your 401k says $1.6 million, but also the $1.6 million only buys $1.45 million worth of stuff. So it's much worse than it looks. Your assets have been devalued. Every asset you have has been devalued by 10% because it's priced in dollars. Whereas other countries, every other country compared to us, has gone up. Canada is from, 69 to 72, 5%. Euro's 104 to 114. They gained the whole 10% against us. Japan 64 to 70, gained the whole 10% against us. England 122 to 132 is, yep, I'll call that 10%. A little less. We say Canada went from like 60, let's call it 70, all right, 70 to 72 is 5%. We said that. Switzerland 110 to 123. You're going Switzerland more than 10%. Australia, even now, whatever the hell happened here, I wasn't paying attention. I don't know what happened to Australia at that point. What is that? A couple of countries took a bath, right? Australia and New Zealand took like a dive. England took a little dive, but Australia and New Zealand got crushed. Anyway, whatever the story is, so Australia managed to eke out 62 to 64 is a couple of percent there. And New Zealand from 56 to 59 is a good 5% there. So they've all gotten stronger, and I'm sure you guys heard that Russia is up 38%. Their currency has improved 38%. Why? No tariffs, much stronger against the dollar. Trump has been allowing Russian oil to hit the market, which Biden was not allowing. So now they got their oil trade and their petrodollars back, and also, what was the other thing? Oh, and they're tied up assets. Trump's actually negotiating to allow Russia to use all those frozen assets to buy our oil and stuff. And that's really messed up. It's like, but don't even get me started on that, because then people say I'm picking on Trump. But I mean, for God's sakes. So, allowing the Russians back into the banking system by itself is an incredible boost to the Russian economy. And that doesn't mean Trump's under Putin's control. It just means that he does stuff that turns out to be really good for Putin. Can't make a connection there, can you? I mean, that wouldn't be right. Especially, coincidentally, it's almost every single thing he does works out well. Oh yeah, Powell.
That he here in New York on April 4th. The Fed, he says, could find itself in a challenging scenario with its dual mandate goals of low employment and low inflation being in tension, in some form of tension, because of higher inflation and slower growth coming from the tariffs. In that conflict, the Fed chair says, between these mandates, the Fed will judge how far the economy is from each goal and the time it would take to get back to the Fed's.
Oh my God, this woman is so excited. She's going to introduce Powell.
The Fed, at this point, he said, is well positioned to wait for greater clarity before considering any policy changes. The tariff increases, as he said back in April 4th, are significantly larger than anticipated, and so the economic effects will be larger as well.
Gold's up $100 today.
To generate at least a temporary rise.
And speaking of your collapsing currency,
that the inflationary effects of these tariffs could also be more persistent. Keeping inflation expectations well anchored, that's going to be the key for the Federal Reserve and the key to avoiding any persistent.
All right, let's keep this in mind. Gold's up $100 today. In 1,000 years, gold only got up to $2,000 before all this bullshit started happening. $100 in a day. We're talking parabolic rise in the price of gold. It is unmoored from constraints, right? Here it is, 104. Okay, so you look at gold. I'll do a monthly chart. Go back to 1993. So here's gold under $500 until 2006. Then we had the financial crisis and we started throwing money at the problem. And gold went up from 500 to 1750 bucks. From 500 to 1750. Then it started calming down, but then we had COVID, and since COVID, it went from 1,500 to 3,300, more than double. And really, though, since March of 2024, from 2,000 to 3,300, since March, in 1 year. This is all of human history to get to 500, and then over 1,000 as we throw money on the fire for the financial crisis, going up to 1,700, calming, then all the way up to 2,000 during COVID when we're throwing money at the problem, and then even when we got through COVID now, starting a year ago, basically a year ago now, up and up and up and up as faith in the dollar is lost. Faith in the global economy is lost. Everybody is heading for the exits and trying to grab something that will hold value, and Bitcoin looks like that too, because it's anything but dollarized assets.
Ongoing effects from tariff inflation. On the economic outlook, Fed Chair will say that the data suggests so far that growth has slowed in the first quarter, with consumer spending growing only modestly. He does take note of the strong imports we've seen. The front
so Dow's down 400, 1%.
As well as consumers, when it comes to purchases, those imports will weigh on GDP. Households and business surveys, he says, show a sharp decline in sentiment, including elevated uncertainty, largely reflecting
NASDAQ down 2.5%.
Despite all this heightened uncertainty and downside,
S&P down 1.7%, 5,300.
Solid position, including the labor market being at or near maximum employment. Inflation, he says, has come down a great deal.
Powell says Q1 data has so far suggests growth has slowed.
For the March PCE that we'll get at the end of this month. He sees them very well.
And this is pre-tariff. Q1 is pre-tariff.
So it looks like at least the
Q2 is going to be pre-tariff too, though, for the most part, because of the pause.
Steve, stick with us because I want to get your take on exactly what we should take from those comments. I also just want to mention the market session lows there. During you breaking that news, Steve, we're down 1.7% on the S&P 500.
Are we ever going to get to Powell? I don't get this. Oh, there he is. All right. Yeah.
To that kind of introduction, Austin. So I'm looking forward to our conversation.
Powell's obligation to keep one-time price hikes from becoming an ongoing inflation problem.
Monetary policy. So at the Fed, we are always focused on the dual mandate goals that Congress has given us: maximum employment and stable prices. Despite heightened uncertainty and downside risks, the U.S. economy is still in a solid position. The labor market is at or near maximum employment. Inflation has come down a great deal, but is still running a bit above our 2% objective.
I'm done. To me, that's it. As soon as he starts bullshitting like this and saying, well, inflation is still coming down and we're still a little bit above our 2% objective, it's bullshit. You know it's bullshit. Why listen to him? Why pay attention to anything he says? This is a bullshit speech that's meant to calm you down, because they knew that what happened this morning with China retaliating and so on and so forth is going to cause, not China retaliating, with Trump wasn't China. It was Trump whacking the chip companies and damaging their profits. And again, it's not just about these companies. It's about the fact that he can do it at all. The fact that he can do it at all means no company is safe, means all American companies are subject to his whim. That's not a great investing climate. And if people decide to start heading for the exits, there are not enough buyers to support the sellers, and things can drop really, really fast. And it doesn't matter if you have a good company or a bad company, it doesn't matter. They're going to try to sell everything. These index funds, because don't forget, index funds have taken over the markets in the last few years, and they control everything. And when you sell an index fund, every stock in the fund gets sold. Doesn't matter if it's good or bad stock.
Briefly to the incoming data, we'll get the initial reading on first quarter GDP in a couple of weeks. The data we have in hand so far suggests that growth has slowed in the first quarter of this year from last year's.
Growth has slowed, we know that.
Despite strong motor vehicle sales, overall consumer spending appears to have grown modestly. In addition, strong imports during the first quarter, reflecting attempts by businesses to get ahead of potential tariffs, are expected to weigh on GDP growth. Surveys of households and businesses report a sharp decline in sentiment and elevated uncertainty about the outlook, largely reflecting trade policy concerns. Outside forecasts for the full year are coming down, and for the most part, point to continued slowing, but still positive growth. We are closely tracking incoming data as households and businesses continue to digest these developments. In the labor market, during the first 3 months of this year, non-farm payrolls grew by an average of 150,000 jobs per month. While job growth has slowed relative to last year, the combination of low layoffs and lower labor force growth has kept the unemployment rate in a low and stable range. Meanwhile, the ratio of job openings to unemployed job seekers has remained just above 1, near its pre-pandemic level. Wage growth has continued to moderate while still outpacing inflation.
Huh.
Overall, the labor market appears to be
good job.
And broadly in balance.
Wow.
It is not a
Look at this.
significant source of
Dow.
inflationary pressure.
NASDAQ.
As for our
Dow's going off a cliff.
Inflation has significantly eased from its pandemic highs of mid-2022 without the kind of painful rise in unemployment that has frequently accompanied efforts to bring down high inflation.
Dow
Progress on inflation
below
continues
40,000.
at a gradual pace, and recent readings remain above our 2% objective. Estimates based on the most recent data from last week show that total headline PCE prices rose 2.3% over the 12 months ending in March, and that excluding the volatile food and energy categories, core prices rose 2.6%. Looking ahead, looking forward, the new administration is in the process of implementing substantial policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. These policies are still evolving, and their effects on the economy remain highly uncertain. As we learn more, we will continue to update.
See, they don't know what's going to happen either.
The level of tariff increases announced so far is significantly larger than anticipated, and the same is likely to be true of the economic effects, which will include higher inflation and slower growth. Both survey and market-based measures of near-term inflation expectations have moved up significantly, with survey participants pointing to tariffs.
Oh, he's not live. We're behind because I was yapping so much, but we're a good 15 minutes behind. Oh.
Survey measures of longer-term inflation expectations, for the most part, appear to remain well anchored as well. Market-based break-evens continue to run close to 2%. So, as we gain a better understanding of the policy changes, we'll have a better sense of the implications.
All right, yada, yada. Holy crap. Oh, it's a Q&A session. I want to see what he said right now that made the market come up a little bit.
The effects of immigration are not thought to matter much for inflation. The effects on demand and supply will more or less cancel each other out. So we wouldn't expect there to be a big impact on inflation.
You've seen in recent weeks substantial talk about layoffs in government, as well as freezes in research establishments and universities in jobs. How soon and how big will this be in its impact on labor markets?
So it's too soon to say, but what I can say is.
Wow, NASDAQ's down
Of course,
3
people
point
being laid off
something
in
percent.
government, this is highly significant to them. We don't know how big that's going to be. Right now, it's not big enough to affect a workforce of 170 million people materially. In terms of the cutbacks in funding and for science and things like that.
NVIDIA's down
we do see
8.5% now.
areas,
Wow.
particularly in cities that have a lot of universities and research
Oh my
hospitals and
gosh.
research institutions. We're really hearing significant layoffs and significant impacts on employment. I don't know how much that will total up to.
Dow 39,773, down 600 points.
Research may have implications for economic growth, for productivity, for health, for all kinds of things, but those are very difficult to estimate in real time.
Now, given that we're talking about the future, you may be confronted in the not so distant future with both
All right.
high levels.
Ay, 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 ay. So he's got nothing to say that's helpful. The Fed is not going to save us from Trump. So we have a failure. The Congress is not going to save us. The courts are not going to save us. The Federal Reserve is not going to save us. No one is going to save us. So congratulations to all the Trump voters. You got exactly what you wanted. You have an unchallenged man running this country the way he feels like it. And this is what it looks like. Look at that. That's amazing. So the actual Dow is 200 points below the projected Dow. These guys haven't woken up to what's actually happening yet. The futures. Crazy. All right. So I don't know what this webinar is supposed to be about, but holy shit. All right. Anyway, yes. So I'm doing my portfolio reviews. There you go. Here's a story. I'm doing the portfolio reviews, and I'm thinking, and again, warning. If you don't have massive hedges, you got to cash out. You can't just hang on and every day say, oh, maybe it'll get better tomorrow, and then we drop another 1,000 points. And I'm thinking, even with our hedges, I'm thinking this isn't going to be worth it. I just reviewed our positions. I'm not unhappy with them. We have a lot of good positions, but that doesn't mean that they're not going to go down. No matter how good they are, no matter how good the companies are, it doesn't matter when you have a completely screwed up economic policy. And you're driving the country and probably the entire world into a recession. And like I said, even if he changes his mind again, even if he makes a new decision tomorrow, it still doesn't rebuild the trust that we used to have with our allies. Reputations take years to build and can be destroyed in a day. And then they take years to build back up again, if ever, because, no matter, well, not, like no matter what he does for the next 2 years, you're still not going to let P. Diddy babysit your kids, right? That's just not going to happen. His reputation is destroyed. Okay, you're not going to invite Kanye to your Seder because his reputation is destroyed. Doesn't matter what you thought of him before. Doesn't matter what they do after. There's always that time. Look at Germany. Okay? It's like a fool me once thing. They had a war and they lost World War I. Okay? Didn't go that well for them. Then World War II, went much better for them for a while, right? Big war, very, very good war. Or, they took over most of Europe, basically. Went a little far, as right-wing organizations tend to do when they're given too much power. They went a little bit too far, started deciding who they liked and who they didn't like. I guess that's a nice way to put it, right? They decided who was good. They decided what the factories were going to produce. Generally, it was weapons of war. And they ran the economy the way they wanted, and it all ended in a complete and total disaster. But that's not the point. The point is, here we are, 80 years later, and we don't trust Germany. We still look at Germany and think about that time. Remember that time 80 years ago? And you got to think Germany is saying, oh, come on, guys. It was 80 years ago. None of us were even born. That's like blaming Italy for the Roman Empire, It's getting to the point where you really have to let it go. How many people go, "Oh, you're a Mongol? You're from Mongolia? Oh no. You guys are the worst." So there's a certain point at which you got to say, okay, you know what, it's time. And yes, of course, Germany, people go on vacation there. We like Germany. They're our allies in a lot of stuff. We trade with them constantly. So yeah, it's been worked out. But there's still that sort of visceral thing that a lot of people have for Germany. And that's what I mean about reputation, though. You're never gonna. Well, not never, but like I said, Rome and the Mongols, right? It takes a long time for people to ever treat you the same way as before that one slip up where you ruined your reputation. And we just did it. America just ruined its reputation. And it's not going to get better tomorrow or next quarter or next year or the year after that. We are going to be looked at as the country that flip-flops, changes its mind, changes its position, changes its alliances. That's going to be our reputation internationally. You can say, oh, that's not how I see it. Yeah, believe me, Germany doesn't see it that way either. Italy doesn't see the Roman Empire as being a big problem. They were like, that was a great time. That was make Italy great again. We used to control the whole freaking world. It's just you can't apply that. Even once you decide that you're going to tear up your reputation and shred all the alliances you have, and stab your partners in the back, basically, it's not going to be forgotten. And we might forget it. It's easy for us to say, I'll forget that. That was Trump. We have a new president now. No. You were crazy enough to elect Trump in the first place. You could be crazy enough next 2 years to elect another psychopath. This was our decision as a people. We looked at 330 million people and we said, out of everybody we have to choose from in the United States of America, he's our guy. We did that, all of us. We let that happen. We voted for him. Whether you voted for him or not, you voted for him because he didn't stop it. Casting a vote, and that's the biggest bullshit also in the elections, is when people think, I casted my vote, that's all I could do. That's bullshit. You don't like a candidate, you get out there and you do something about it. You campaign, you support, you knock on doors. You don't just let him win because he got more votes. And that's it's a very dangerous thing. I mean, see, we just had Passover. I'd sit down with my brother, who's a Trumpy guy, and who I never speak to. I hardly ever speak to him, and he's talking about the Trump stuff, and I'm just like, and my mom's just like, hey, nah, no politics. So it's like this concept of like, that's the problem though, is that you don't discuss the politics. You don't, it's become a thing where you can't even talk to people about it. And that means that means the rule is no backsies. Nobody changes their mind anymore. Nobody discusses anything anymore. Nobody can have an open discussion about their views, because you might hurt someone's feelings or whatever. I mean, that's, you know. And I don't know, I mean, I'm in Florida now, and people get really upset when you talk about like you talk about politics, people get upset in like 10 seconds. They're like, oh my God, I can't believe you. And, you know, in New York, we always argue politics. It's like part of our life, and we always talk about it, and you don't have to agree with people. You can just argue. The arguing is fun. It's a sport in New York. So I don't know. I'm just telling you that it's like nothing's going to change if you don't discuss it. And if you don't discuss it, then things are just going to happen to you. And if you sit there and passively let it happen, then it's your fault. You know, we're Americans. This is our guy. End of story. So this is our guy. These are our policies. This is what we're doing to the rest of the world. So what was I talking about here? Oh, portfolio review. Right. So we just dropped from 54 to 53 today. That's where we're at now. This is our beloved death cross, which told us that that was going to happen, but you know, now it's actually happening. It doesn't matter why. See, that's the thing. It doesn't matter what caused it. Something was going to cause us to go lower. There's so much downward pressure that something was going to cause us to get lower. And the bottom line is, what is this going to end up looking like? We got rejected at the strong bounce line. And now we're coming back down, and we're going to test the weak bounce. And if we fail that, we're going to go all the way back to 5,000, which, by the way, is 10% down from where we are now, from where we were this morning, pretty much. And that's awful. And if we're having another 10% run down, then everything's going to start looking very, very ugly again. And I told you, you can't go by this RSI anymore. You can't go by this MACD anymore, because these were written under completely different conditions. Okay? So in other words, let's say, here's a good way to explain it. Let's say that this or this is tracking the average oxygen level. Okay? And here we are on different places on the earth, and we're being told that today the oxygen level is here, and now it's here, and now it's here, and now it's here. And we have a pretty reasonable expectation that this is the range for the oxygen level everywhere we've been on the planet, right? But then now we go to space and we check the moon, and all of a sudden we don't have that bottom anymore for the oxygen level. We now go much lower on the oxygen level. Why? We're no longer under the same conditions that we were in. Our baseline was created under completely different conditions. Therefore, we are actually stupid to think that the baseline will continue when we've completely changed the conditions. That's what this is. We have completely, on January 20th, we completely changed the conditions. And that's when we elected Trump, and then it's not even 100 days yet. What's this, like 85? So in the last 85 days, these policies have been rolled out one by one by one, and the market has gotten more and more and more volatile, generally for the worse. And now his policies are rolling out. It's going to take us years until we understand the full impact of the difference of the policies. But what we can already see is we're off the baseline. We can't count on this to hold up anymore. We can't count on these lines to hold up anymore. We were pretty damn sure of this. We had a rising 200-day moving average. We had a rising 50-day moving average the last time we tested the weak bounce line. We were pretty damn confident it was going to go way up. We made a lot of bets on this thing after it went down. We felt that this was a glitch and that we should go up, and there was no reason not to. But now, why should we recover when the rules are completely different? Recover to what? We're on the moon. There's no fucking oxygen. It doesn't matter that you can't just point to the chart and say, but there was oxygen. This was the average oxygen level. So go out again and check. That's idiotic, right? I'm not going to go out again and check. I will die. There's no oxygen. There is still no oxygen. Tomorrow there'll be no oxygen. 100 years from now there will be no oxygen because we're on the freaking moon. Do not get anchored in a past that does not exist. And again, I'm telling you this in context of the fact that even as I'm doing these reviews, and I love our positions, I love the companies we have, I firmly believe that given 2 to 4 years, unless Trump gets reelected, given 2 to 4 years, we will begin to recover. unless he has a third term, in which case, I don't know, in which case the moon would sound very appealing. It's we're just not there anymore. This is not the planet we lived on a year ago. Not a year ago. In 2024, this is not the same planet we lived on. And we have basically had our heads in the sand, pretending things would go back to normal. But there's no freaking normal right now. Normal was Joe Biden would say, I want to pass something, and Congress would say, no, you're not. And then the courts would say, well, you can do this, but you can't do that, blah, 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 right? That was normal. And you know what happened? The net effect of that is though that your policy stays pretty much the same, and the more drastically you try to change it, the more resistance you would get from the House and the Senate and the courts. And even if the president was in a coma, which who knows how much of Joe Biden's time he was in a coma, at least there were people around. That's the other thing. You had a cabinet full of people who knew how to run the government. You had a government full of employees who knew how to run the government. We don't even have that anymore. We fired the people who know what they're doing. We replaced the cabinet with a bunch of billionaires with zero experience actually running running the branches of government that they're in charge of. We have cabinet people who have stated that their job is to dismantle the departments they're in charge of. This is not the same world that we lived in on December 31st. And the changes, the drastic changes that have been implemented since January 20th are just barely starting to take effect. And Powell just said that. Powell just said this is much, I don't know if he said worse, it's much more than we expected, the tariffs as they came back. Same thing as I said. On April whatever, Trump announced tariffs, 25% on cars or whatever the number was, and things from Mexico and blah, blah, blah. Then he said, oh, that's too much, I got to pause. And then he comes back with much worse. That's not what anybody expected. We thought he was going to pause, and then he'd put some on, and then he'd pause that, and then blah, blah, just normal negotiating stuff. This is not normal negotiating stuff. And by the way, it's becoming very obvious now, a week later, that when they said last week that 75 countries had come to the table looking to make deals, that the real number is pretty much none. There's no trade talks. There's no people sitting down with anybody. I mean, the thing is, we're not the only country in the world. Fox News isn't the only station in the world. You can't, just because the press girl, that Trump's press girl, the blonde girl, just because she says something doesn't mean it's true. In fact, frankly, if she says it, it is almost certainly not true. I think that's a more likely statement. But just because she says something doesn't make it true. And then just because it gets repeated on Newsmax and Fox, which, by the way, Newsmax is now there to make Fox sound middle of the road. So they've invented a whole new thing to make Fox sound rational. So just because you hear it on Newsmax and Fox the fact of the matter is there's an entire planet of news out there. And you guys know I'm an avid reader of news. And I read, the BBC News, and I read Le Monde, and I read whatever the hell it is in Germany, I forget now. Der Spiegel. I read Der Spiegel. I read the China Post. I read Japan's news. I like to read different news to get different perspectives. And one perspective we're getting is nobody is talking to Trump. Nobody is negotiating a trade deal. And when they said 75 countries have come begging to have talks, I'm like, that's a lot of countries. That's a real large amount of countries. And I'm like thinking, did they really all fold like immediately? That just sounds kind of weird, because other countries have pride. Other countries have national pride. Other countries have other trading partners to talk to. And rather than go rushing to a maniac who is operating outside of the norms of political and social decency and breaking 100-year traditions with his trading partners and betraying his allies, rather than going back to that guy, they've got the same 75 people have each other to talk to first and say, how are we going to deal with this? Trump is saying, oh, they're racing here because whoever cuts a deal first will get the best deal, blah, blah, blah. Meanwhile, and this is what a used car salesman says to you, right? This is what a freaking guy says when he's trying to get rid of his last piece of crap, whatever it is he's selling you. And he's like, oh, well, I got a hot prospect coming in 15 minutes, so you better put some money down before you walk out of the showroom or it's going to be gone. And then you come back a week and a half later and it's still sitting there, whatever. That's what this is. They are desperately trying to scare somebody into making a deal, anybody. And if they had anybody, they would have done a deal by now. If they had anybody willing to make a trade deal with them, they would have done it by now. Because if you don't make a trade deal, you start looking worse and worse, and your position starts deteriorating very, very rapidly. And although these people are terrible negotiators, and although these people are terrible at running governments or understanding trade dynamics and so on and so forth, except for the one guy, there's the one guy who knows what he's doing with trade. But the guy's in charge of the trade is the guy who knows what's going on, but nobody listens to him. That's the problem. He's only there for show. But the majority of these guys, when you hear them talk, they don't understand what they're talking about, and they're making terrible deals, and they have terrible ideas for how a deal can be made. And it's not going to bring people to the table. It's the whole premise of what they're asking for. Somebody said something really intelligent in, I forget who was, I think it was on Bill Maher on one of the shows on the weekend. Anyway, somebody made a very, very excellent point, and the guy said, I have a 40-year trade deficit with my dentist. I pay him to fix my teeth, and he never buys anything from me. That was a very good example of how trade actually works. Trade is about buying from somebody and trading for something else, but the trades aren't always direct. And that's what I was talking about before with money and so on and so forth. The trade isn't always direct, okay? I might be a chicken farmer, and I might have a truckload of chickens, like 25 chickens in the back of my truck, and I'm looking to make a trade. But maybe the dentist doesn't like chicken. But he says, I tell you what, get me a duck and I'll do it. So I have to go and find somebody who wants to trade two chickens for a duck. something like that. I give the guy 2 chickens, I get a duck, I go to the dentist, I give the dentist a duck, and now he's going to do my teeth. Okay, like I said, money smooths all that out. Money is what makes all this stuff work without everybody having to run around trading with everybody else. But before there was money, that's what we did. We traded. But not everybody needs everything. So sometimes you're going to run a trade deficit. It's not a fault in the system. It's logical. Okay? Some people are good at making some things and they make them all the time, and you may want them or you might not want them, but whether you want them or not, there's still going to be trade going on. And so the more specialized something is, like let's say a cocoa producing country or a coffee producing country, where the US would buy a tremendous amount of coffee or cocoa, like all you got, or sugar, a sugar producing country, right? We might buy everything they've got, but maybe what they've got is basically sugar, and what they need is, or let's take Cuba for example. Well, we don't really trade with Cuba, but let's take Cuba. They do a tremendous amount of sugar. They don't produce much. They don't have factories really. They're basically a farming country. Okay, they don't produce a lot of goods. They produce cigars, and they produce other agricultural products, and they produce sugar. If we traded with Cuba, we'd have a huge deficit because we'd be buying all their sugar, and we'd be buying all their cigars. What would they buy from us? Not much. They buy some Nikes. They buy some clothes, whatever. If we could produce it cheaper, we can't really produce it cheaper than China, so they're probably not going to buy it from us anyway. Probably some farm equipment would be nice. Some cars that are newer than 1950 they might want to have. But that's the trade. So we would then run a trade deficit with Cuba. Why? Because they're a poor country that can't afford the stuff that we sell. We sell high-end stuff. We sell a lot of high-end stuff. And they don't use a lot of fuel. They don't have their country's not very big. They don't travel much. They don't do a lot. They only have the one airport. So we would naturally, as a big industrialized country, trading with an agricultural country, we would naturally run a trade deficit with Cuba. We would buy more things from them than they buy from us. And that's true of many, many countries around the world where we have a natural trade deficit. Or again, like I said, with cocoa, coffee, whatever, it's, we're going to buy all the coffee they have and produce it, and we're producing the deficit because we want the coffee. You can't arbitrarily balance every country and say you guys have to buy whatever we buy from you, you have to buy from us. Whether it's better quality or not, whether it's better value or not. As I mentioned when we were looking at the places where we have a trade deficit, Walmart buys $100 billion worth of Chinese goods. Does China buy anything from Walmart? No, of course not. Walmart by itself is 1/4 of our entire trade deficit with China. Just Walmart buying stuff. So if you want to balance trade, just tell Walmart to stop buying Chinese goods. But there's a problem there, because let's say now Walmart, who sells $700 billion worth of stuff a year, buys 15% of it from China. $100 billion, 15% of it a year from China. We tell Walmart to stop buying from China, and we're attempting to do that by charging 125%, 145% tax on Chinese goods. But you tell Walmart to stop buying goods from China, and what happens? So let's say it works perfectly and there's no seepage and the Chinese goods stay in China, or they don't get made, whatever. Okay, so China is either going to sell those goods to other countries who would like cheap Chinese products for their people, or China is going to just basically stop producing those and find something else that people want to produce. want to buy. Okay, they'll find $100 billion worth of other things that people will buy from them, maybe not America, other countries in the world who also have money. In fact, they have, stop saying America has 20% of the world's economy, start saying the world has 80% of the world's economy. Right? Because if you're in the playground and you're one guy and there's a gang of 4 kids, the fact that you say I've got 20% of the guys here is not going to be in your favor. And that's our logic. Our logic as Americans is saying we've got one guy, you only have 4. You're in big trouble. That is beyond stupid. That's our trade policy. You have to do what I say because I got one guy. He's a fat guy. He's a very fat guy. We can sit on one of you while the rest of you kick our ass. It's not how things work. In fact, think about all the people in your life you have a trade deficit with. Think about all the people where you go. When you go to the diner down the street and you give this guy money 3 days a week for your sandwiches or whatever, or your eggs and something, and or the grocery store where you spend $300 a week on groceries, right? And you have a deficit of $15,000 a year with the grocery store. Should you tariff him? Should you demand he buys? Let's say you're a dentist. You got to go into the grocery store and demand that they come to you for their dental thing, or what? You're going to stop going to the grocery store. That's your demand. I'm going to stop buying your groceries. They're like, okay, have a nice day. So what if you were a $1,000 a month grocery shopper? Ooh, you're the biggest single customer. You buy $1,000 worth of shit at the grocery store every week. God knows what you do with it. Every single week you buy $1,000 worth of groceries, and now you go to the store manager. You demand that he sends 3 or 4 employees to you for your dental work to even it out. Otherwise, you'll what? Otherwise, you'll boycott him. Otherwise, you're going to tariff him. Otherwise, you're going to put a surcharge on your dentistry, even though he doesn't go there. And that's your whole argument in the first place. You're like saying, I will charge now double for my dentistry if you come. They're going to be like, well, we're not coming. That's what China just said to us. They said, you know what? For 125%, we're not going to buy your stuff. Because it is a playground argument, because these guys are saying, because Trump said, I'm going to tariff you 20%, I'm going to tariff you 40%, I'm going to tariff you 125%. Oh yeah, 145%. The difference. Once you go past 100%, nobody's going to buy your stuff. You just made yourself the most expensive toothpaste on the shelf without improving the quality, without improving the appeal to the consumer. I will just buy the Vietnam toothpaste. I will just buy the French toothpaste. I will just buy the Norway toothpaste. I don't know what the frick it is. Who cares? It ain't $4 a tube or whatever. I don't even know what toothpaste costs. But you get the idea. How are you going to fix your trade deficit with the grocery store? How are you going to fix your trade deficit with the diner? How are you going to fix your trade deficit with the guy who fixes your car? You need all those things. You need those things. They don't need you. You need them. You need their stuff. Over the years, they have gained their expertise in selling you groceries, in sourcing your groceries, in learning how to fix your car, in learning how to fix your teeth. They have developed those expertise. They've developed their own pipeline of goods and services so that they can then funnel it to the thing that you want. And that is what you are paying for. And your deficit with them is made up for by your surplus with somebody else. You can't expect every single negotiation you make to be even. That's not how trade works. That's not how countries grow their economy. That's not how capitalism works. We're supposed to be the capitalist guys. We don't know how capitalism works. And I'm saying all this because I just think it's important to understand that the damage that's being done here is not necessarily reversible. That we are waging a trade war, an economic war on our former allies and on China and on our NAFTA allies. And we are pulling out of NATO. We're doing all this crazy shit based on a completely wrong premise of how trade works and how capitalism works. And we're breaking the system that took decades to build. Let's say just since post-World War II, say 80 years. Took 80 years to build this. And the reason it got built the way it did is because we were considered after World War II the world heroes. We were the, America, we already helped out in World War I a little bit, but when World War II happened, took us quite a while to actually get in gear and do something. But when World War II happened, after Pearl Harbor got bombed, we freaking woke up and said, okay, we're gonna go help now and get rid of this and push back these Nazis and clean up Europe and so on and so forth. We were the freaking heroes. Because they had been taken over and we did save them. And we did kick Germany out of France and out of Italy and out of whatever other countries they were in, all those countries. Spain, there's a country. We kicked the Germans out of all those places. So we were the big heroes. And everybody liked us. And we had a super strong we had some super strong leaders who were engaging and put trade deals together and did things. And even Nixon, slimeball that he was, even Nixon said, you know what? Let's go talk to China and let's sit down with them and let's treat them like equals and make trade negotiations with China. And that kicked off the second stage industrial revolution where China became our factory floor, basically. Because why? Because they did what they're good at and we did what we're good at. We moved into a more service-based economy and away from a manufacturing economy, and they moved towards a manufacturing economy from an agricultural economy, because that's how economies develop. Economies develop agriculture, production, services. We are a service economy, or we were a service economy. And that's when we started to really grow and expand. And it's thanks to China and our trade deficits with China. Anyway, so hedges. Where the hell do we go from here? Let's look at the portfolios. Oh, wait, somebody has a comment. John says, I think a good word to explain our current situation is hyper-normalism, where the citizens of a failing state believe their leaders are lying. The leaders know that the citizens believe their leaders are lying. Signs of stress and contradictions are everywhere, validating the sense of doubt, yet everyone carries on as normal. I want to see if I agree with that. The citizens of a failing state, is that us? Are we a failing state? Were we a failing state before this? Were we a failing state under Biden? That was Trump's election thing, but were we failing? Everybody's pretty happy. Generally, we were fairly happy, especially compared to where the polls show now. And the economy was certainly expanding and everybody had jobs. So I don't know if we were a failing state. Did we believe the leaders were lying? Yes, thanks to the last 20 years of Fox and all, we now believe everything is a lie. We think everything's a conspiracy. We don't know what the truth is anymore. We don't. And AI is not helping. AI is not helping at all. AI means you can't believe anything you see either. You can't just not believe what you read. You can't believe what you see anymore. So the leaders know the citizens believe the leaders are lying? Yeah, pretty much. I mean, if you're talking about Trump, yeah, he's lying. He's always lying. The chance of him not lying is slim. Signs of stress and contradiction are everywhere. Yes, of course. Validating the sense of doubt. Yes, everyone carries on as normal. I don't know if we're carrying on as normal anymore, though. I think we see, this is the thing. I think we are losing faith in this country. I think the world is losing faith in this country. I think, you know, both of my daughters don't want kids, and I think more to the point, I don't have a good reason to tell them that they're wrong. They're young, they're still in their low 20s, but at this moment, they don't feel this is a world they want to bring children into. And I have a very hard time, and generally in my life, I've been generally an optimistic person, but at this point, looking at what's going on right now, I really can't sit there and say, no, you're wrong, this is ridiculous, have kids. I would have 20 years ago said that for sure. I had kids 20 years ago. It's them. They're grown up now. And I honestly, when I had my kids, I considered the concept of global warming and problems and so on and so forth, and economic upheaval and so on and so forth. But I figured, and we got a good 60, 70 years left. You know, I think we'll make it to 2100, and so my kids are safe. Things have not improved in the last 20 years that they've been going through. Obviously didn't improve. We had COVID. They got hit by COVID in high school. And my younger daughter's graduation was canceled. My older daughter's graduation was the last one they had at the school for a couple of years. Their college, Maddie spent her first 2 years in college basically in a dorm, not even leaving the campus, not even leaving the dorm room. The classes were remote. I'm like, are you kidding me? You're charging me money so my daughter can sit in a dorm and go on a laptop and see some class that she could have done that at home. Why are we paying for this? It's so insane. And Jackie's first 2 years, I think Maddie's first year was normal, and then the second and third years were COVID, and Jackie's first 2 years were COVID. And anyway, could you imagine having your college life just taken from you like that? Like your whole, ugh, don't even start. I feel so bad for them. Anyway, so, and now after going through that experience in college and the rhetoric that goes on in the politics and all that crap, and the way the economy is and the world is and the feedback they get, and kids today, they have friends all over the world. They don't just talk to Americans, they talk to people all over the world. They make friends everywhere, and they're all on TikTok and Facebook and whatever, and they have all these people they talk to in different countries. And you know, they know what life is like in other places. They're not under illusions. But even so, they're like, the world is getting to be a screwed up place. And I certainly can't in good conscience say, no, you're completely wrong. And it breaks my freaking heart to think I might actually go through my life and not be a grandfather. I got to tell you, it's a horrible thing, and it's happening all over the world. It's not just happening to my kids; it's happening all over the world. Birth rates are down. People are deciding not to have kids. Things are changing drastically, and then that's terrible too, because that then leads to a rapidly aging, weighted population. You no longer have enough young people to take care of the old people. This is why everybody's rushing to get us robots, because there are not going to be enough people to take care of the elderly in the next 10, 15 years. There's already a problem. China, because of their one-child policy, they've got a horrifying aging population. It looks like a champagne glass. It's like there's very, very few young people supporting a massive old population. Anyway, so with all that, we still try to make some money. So our hedges in the short-term portfolio, we made $1 million. That's nice. But honestly, this $1 million, we have $200,000, or not 200, but 150, whatever. We have $150,000 loss in the butterfly portfolio, $150,000 loss in the income portfolio, and that's 300. And I'm sure we're down 500 in the long-term portfolio. So, you know, we might come out a little bit ahead here, but we're not way ahead. We needed this $1 million. We had $2.3 million worth of protection, and we made $1 million of it up so far. So what we did in this portfolio review is we bumped our protection to a shit ton, I think is the correct word. Here's the SQQ changes. And that gave us 2.8 million of protection from where we are now, not from total. Now we have $2.8 million worth of downside protection against another 20% drop. And here we have 750. So it turns out to be $3.5 million worth of protection against a 20% drop in our two portfolios. That's a lot. And that means if the market drops another 10%, we're going to make we'll make over $1 million, 1.5, $1.75 million on our hedges. And that is the only reason we haven't dumped all of our longs, because we have a balance of money coming in. But if you don't have that, I'm telling you that it is a total crapshoot holding on to long positions. I mean, the Dow is now down 660 points. The S&P is down 2.5%. The NASDAQ is down 3.6% today, based on one tiny little thing that Trump did, which is cause these chip companies to have to write down their inventories. You would think it's nothing, but it's not nothing at all. It's massive, because he's pushed away their ability to make money, because it's not there's a tariff, it's not there's a tax in what he did. It's a requirement that they get approved to send their chips to every single customer one by one by one. And so NVIDIA can't ship their chips until the dismantled whatever frickin' department it is, whatever department it is, I can assure you it's been dismantled. But the dismantled department that has to approve their application to sell chips to a certain company in a foreign country is a minimum 6-month, possibly 12-month process, possibly never, if Trump decides he doesn't like somebody in the transaction. If he doesn't like this guy or that trade guy, or if somebody said something bad about him, he just puts it on a shelf and says, sorry, gotta wait for my okay. Maybe he's just waiting for a bribe, I don't know. But it is a 6 to 12-month process, and that means that NVIDIA and all these chip companies have to say, okay, well, now we're going to have to take all this money we expected to make in Q1 and Q2 and Q3 and toss it into Q4 or possibly into all of next year. And by that time, these H2O chips from NVIDIA may be surpassed by somebody else's chips. You're giving a year. That's why they did a write down. They had to write down these chips because they don't even know if they're ever going to be able to sell them a year from now. Chips don't work like that. And even if they sell them, not for that price. Okay, these were $20,000 chips, let's say. But last year's chips, H1Os, whatever you want to call it, last year's chips this year are going for $10,000. So if they have to wait a year, they're going to be selling year-old chips. Maybe they're only going to be able to sell them for $10,000. They have contracts to deliver chips now for $20,000, but by the time they actually deliver it, it's going to be older technology, and their trading partners are going to say, hey, we're not buying it for that much. We want a discount. Because by now, 6 months, 9 months, 12 months from now, all of a sudden, Huawei, who is supposed to be the loser in this, company like Huawei in China, they started making chips that are just as good as your H2O chips for half the price. So no, thank you. And then NVIDIA is stuck with the chips. They got to get rid of these chips. They've got to sell them to somebody. That's what we're doing. And that's a teeny tiny thing. That's just Trump waking up because there's no courts, there's no Congress, there's nothing to stop him. And he just wakes up and says, you know what? I think we are going to have an approval process for everybody who sells chips to countries I don't like. So here's a list of countries I don't like. And here's the approval process that we're going to go through. And Elon, when you're done cutting everybody from all the departments, put a couple of kids together and let them go through these contracts and talk to people and whatever. And until we have a really good system of funneling bribe money through back channels that can't be traced, no deals go through. Ain't that America? So how do we invest in that? So these are great companies. Well, this is just a short-term portfolio, but look, Lennar, they build homes. Cost of building materials goes up because now we're charging 25-35% tariffs on lumber, on the bolts that they put in the houses, on the pipings, on the sinks, on the appliances, so on and so forth. Suddenly everything is 25-30% more expensive. The house that was $500,000 is now $650,000. Same house, same stuff. No economic benefit at all has been conveyed on this property. It is just now $150,000 more expensive for no reason at all. And even worse for the guy buying the home, if they reverse the tariffs, if another administration comes in, if Trump is impeached or whatever, or if Trump suddenly has a change of heart like the Grinch and his house grows 3 times all of a sudden, it doesn't matter, because what happens now is you paid $650,000 for your house, but now the same house can be built for $500,000, and you have just taken a hit. The money you paid in these tariffs as a homeowner has become an economic hit that you've taken on your home, because a brand new home can be built for 1/3 the price, because there is no actual value in the $650,000 that you paid for your home. That's how screwed up this is. So the decisions you have to make now can be turned into mistakes a year from now, 2 years from now, 4 years from now, by the simple removal of the tariffs, devalue the purchases you've made. All it is a tax. There's nothing there for you. Nothing is helping you here. And by the way, that goes the same if houses and a washing machine. But if you, in other words, if you pay $650 instead of $500 for your washing machine, right? And then Trump is successful and gets a washing machine factory moved to America, and somehow the washing machine factory can now make those washing machines for $500 in America, probably with robots, right? Not with people. But now they can make the washing machines for $500 in America. It's the same problem now. Your neighbor can buy a brand new washing machine for $500. You're the idiot that paid $650 for the washing machine. So what do you do as a consumer? Well, for one thing, you put off buying things, and that's going to happen starting very soon, because as soon as people start running on the removal of tariffs, and as soon as the consumers start believing that tariffs may be removed and things are going to get cheaper in the next election cycle, they're going to stop buying things now, and they're going to wait and see. They're going to put off every possible thing that they don't have to buy, hoping this is temporary, because again, everything is temporary now, because we have a completely flip-flopping environment in government. We have no checks and balances. We just have arbitrary decisions made by whoever takes power that can completely reverse. It's not just reversing. I mean, Trump's coming in dismantling every single decision that was done by Joe Biden, he is dismantling it, completely reversing. Whatever it is, doesn't matter what it was, doesn't matter what Trump believes, it just, if Joe Biden did it, Trump wants to rip it up and tear it apart and reverse its effects. No more windmills, no more solar, no more recycling, blah, 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 whatever. So Micron is kind of an American chip company, mostly American factories, but problem is they get their parts, they get their bits. It's hard to call it a part. They get their teeny tiny little processors and things. They get a lot of that stuff from overseas. And so again, they have no idea what's going to happen. And Nike, of course, wouldn't exist without foreign manufacturing. Well, the thing about the thing about Nike is, and what do we do with Nike? What do we decide? We actually are pushing into them. Oh no, we're rolling the puts. So rolling the puts isn't quite the same thing. That's not, we're just rolling the puts to avoid getting assigned now. So the thing about Nike, if you think about it, is there are 20, 30 other companies that make sneakers that are half, 1/3, 1/4 the cost of Nike sneakers. They are rubber soled shoes that enclose the foot and have some kind of arch support or whatever, and have some kind of different kinds of padding on the bottom and blah, 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 blah. Nike is the NVIDIA of shoes. They are selling, it's a freaking sneaker. It's it's not that much bigger. It's not a big deal versus a Keds. And when Nike first came out, they were double the cost of other shoes. And then they were triple the cost. And now they're quadruple the cost. They have $300 freaking sneakers. $300 sneakers. They just sit there at the store, and you walk in and you look at the shoe and you go, what on earth is wrong with these people? But they sell them. But not in hard times. In hard times, that's one of the easy switches you're going to make as a consumer, is to say, you know what? I'm going to get the $50 sneaker and not the $300 sneaker. I think my foot will survive in a $50 sneaker. And that's a problem for Nike. Another problem for Nike is they without those, without the super duper star celebrities, that's the whole concept of the Nikes, is having those guys that everybody looks up to and admire. And we don't really have, there's LeBron James basically, but there's not a lot of guys. And Kobe Bryant died. He was a big one too. But it's hard. There aren't that many athletes that are like the guy in the sport. And that's important for Nike. They have to have those dynamic characters to build the shoes around. So that's a problem for them too. They have a problem of finding the right talent in the world the way it is. And it's because the world now, we scrutinize. It's because of social media and everything. Every aspect of somebody's life is known, and there aren't many perfect people. Michael Jordan wasn't a perfect person, but there wasn't the kind of scrutiny on what he did and what his character was like at the time that he garnered any negative feedback, right? His name didn't turn people off. Even what's his face, his teammate Pippen, even Scottie, was it Scottie Pippen? Is that his name? The one that went to Korea. Oh well, whoever. Sounds wrong. Scottie Pippen sounds wrong, but maybe it was. So the one with the tattoos. He, even his teammates though, and other people like that, they didn't fall under the kind of scrutiny, no matter how screwed up their lives were. They were just line items in the newspaper once in a while. Now, if you step one toe over the line, everybody in the world knows it 5 minutes later, and it lasts for however many days it lasts. And again, it goes back to reputations are built over years and destroyed in seconds. And that's a problem with a company that built their entire brand on the reputation of people they can't control. Disney has that problem too with child stars. Disney used to, look at Miley Cyrus. Okay, she was built up from childhood to be a superstar, and yeah, she's got the chops, but Disney had to build shows around her and whatever and control her image and da 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 da. But you can't do that now. It's so hard to take a kid and put them into that kind of spotlight, and they can't step out of line because there's 100 cameras on them, phone cameras on them all the time wherever they go. They get into a fight at a kid's party, in Brooklyn, and there's pictures of it all over the news. Like a girl fight with their friends or whatever. It's all over the news. There is no privacy anymore. There is no time alone. It's not just a line item in the paper anymore. This is like a fishbowl life for all these people. Anyway, so ridiculously priced sneakers, lack of spokespeople, lack of the level that they need to sell ridiculously priced sneakers, and of course now tariffs on top of that. The freaking disaster for Nike. VFC also same problem, branded clothing and such. Best Buy. Now my argument for Best Buy, and we pushed into Best Buy a little harder. My argument for Best Buy is they don't make the stuff, they sell it. So, you need an electric toothbrush, you need a vacuum cleaner, you need a refrigerator, you need a computer. You're going to buy one. You're going to go to Best Buy and you're going to buy one. It might be more money than you wanted to pay, but you're going to buy the item, and Best Buy is going to make their 10% selling it to you, and they're going to make their service contract money selling you service contracts. That's not going to change. So they're being unduly beat up for something that isn't them. They're not paying the tariffs. You're paying the tariffs. You're the consumer. You're going to buy the item. They're paying it up front. It's a cash flow thing. But the reality is you're still going to go to the store and buy it. So it doesn't make any sense to treat Best Buy like they're going out of business because the price of electronics is going higher. Price of electronics always went higher. This is just an extra tax that's being collected. So I live in Florida. There's like a 10% tax on everything, as far as I can tell. It's like the tourist tax that they have. It's like everywhere you eat, everything you buy, it's like a 10% tax. Then, like I said, we've got tons and tons of downside protection. That's the key. So then, the $700 a month portfolio went from 39,000 to 30. It didn't even. No, I'm sorry. It went from 723 to 446. But we only reviewed it like a week or so ago. And again, who do we have? We have Hewlett Packard Enterprises. We have Trox, which is a specialty material, Blackstone Mortgage, Levi. We do have a hedge in here. We have Vulcan Materials. I'm not Vulcan Materials, sorry, we have VSC. I don't know why I think of this Vulcan Materials. Northern Dynasty, by the way, NAK. Remember I told you that? Now, what was our bet on NAK? Our bet on NAK was they've been held up for years. They've been held up for years because the mine that they want to build is extremely dangerous. They want to like build. There's a mine that they want to open up in Alaska. So they own the mine. They just aren't allowed to mine it. They haven't gotten a permit, and they haven't gotten a permit because the salmon people, and salmon is a major industry in Alaska. It's billions of dollars, but the salmon farmers, fishers, whatever you want to call them in Alaska, freaked out because God forbid there's an accident, not a definite thing. God forbid there is an accident and the mine water, the runoff, the dirty water pollution from the mine gets into the water where the fish go upstream to spawn, and you will wipe out the entire Alaskan salmon farming industry or salmon fishing industry, whatever they call it over there. Anyway, horrifying potential catastrophe on a scale that will impact the entire country. Okay, that's why they haven't gotten a permit. So we bought them because I said, well, Trump doesn't care about that. I knew that would happen, and that's exactly what's going on. So everything's moving their way now, and the company is taking off because what happened is that it took, it didn't happen the day he took office, but when he took off, when he was elected, I said we need to buy these guys because they're going to change regulations. And that's exactly what's happening. It's not even a matter of changing the regulations. They're just basically saying we're not going to enforce this. Are you kidding me? We're not going to tell somebody they can't strip mine a mountain just because some fish might die. You know that's 100% against Trump's wishes. So speculation and so on and so forth, and it's up and down, but they're already off to the races. Some things are obvious, some things you can pretty much say is definitely going to happen. So that's a nice gain for us here, and we're going to do better on that. Foot Locker, and again, like Best Buy, they don't make the sneakers, they just sell the sneakers. You're still going to buy sneakers, it's just a question of which one. And also tariff-wise, by the way, company like Macy's, Foot Locker, Best Buy, what are they going to do? They're going to buy the stuff that comes from the places that are tariffed the least and that the consumers will want. These are professional buyers. They know what they're doing. They know what consumers will buy. They know what price points consumers will pay. If they have to switch from one country to another and another, they'll do it. It may take a little inventory rebalancing and things like that, but I love these retailers long term. So there's Foot Locker. Here's Macy's. Here's SoFi, my beloved small bank. Love these guys also. And they've got nothing to do with tariffs. What do they care? And here's Valley the Miners. In the Money Talk portfolio, we've got Lockheed Martin, who we talked about before. ARCB, we got Barclays, we got Foot Locker again. Gold, obviously, a home run, Barrick Gold. Invesco, with their ETFs, they're going to continue to do well. Nokia, what does Nokia care about all this crap? They're in Europe. Ozark Bank, I like these guys. They're not doing very well so far. Pfizer, and again, Pfizer's another one. Why are they down? I mean, yeah, they just had a weight loss. They just had a failure in their weight loss. By the way, the weight loss thing that they had a failure in, they were trying to make a pill form of the Ozempic, of like a weight loss thing that you currently stick yourself with it, and they try to make a pill for them, and the study didn't work out, so they're going to try again. They got lots of money, they're not worried. Okay, the one that their first try did not work out. It wasn't as effective as they hoped. But anyway, so Pfizer long term, it's still a cash machine. Synchrony Financial doing terribly, absolutely terribly sell off disaster. I still think it'll come back, but you're going to have to be patient. Target, again, same story. It's like Target will just sell different things. They will go over their list and say, what do we make money selling? Well, we don't make money selling that. That price point's too high. This one's good. That one's bad. They're just going to go and buy different stuff to sell you. It's funny because everybody thinks the dollar store is the only people who can do this. The dollar store just takes whatever they can buy for less than $1 and that people will buy for $1. That's what's on their shelf that week. And nobody worries about it. Nobody sweats it. Nobody says, oh my God, they're not going to be able to sell this anymore. Who cares? They'll sell something else for less than $1. That's what Target's like too. Target is going to just sell you the things they make money on. They won't buy the things they don't make money on. They'll adjust to the changing conditions. Here's Whirlpool trying to make washing machines. And as I've said about Whirlpool, which is actually doing pretty good considering, the thing about Whirlpool that people keep missing is that they make 60% of their stuff is not imported appliances. It's local. It's more locally manufactured, small appliances, dust busters, grill tops, blenders, things like that. Things that are not big ticket items and not necessarily sourced from other countries. And then we have good old Exxon. Exxon got hit because oil went down so much, but now it's stabilizing, so they'll be fine. What do we got here? The butterfly portfolio. Apple, Apple, Apple. We love Apple. Apple's got cascading issues with their distribution, but again, people don't understand how big Apple is. Apple sells 2 billion iPhones. No, there are 2 billion iPhones in circulation. They sell about 500 million a year. There's only 300 million people in America. Let's say in America, 200 million people have iPhones, and every 4 years they need an iPhone. So it's 50 million a year in America. 50 million iPhones a year in America, 450 million phones a year in the rest of the world. All Apple has to do is figure out which countries that make the iPhone, which are tariffed the least, and send those iPhones to America. And you know what they can do right now? While there's a pause on the tariffs, Apple can take 50 million iPhones, which they already started doing. You heard about these planes last week. Apple just takes 50 million iPhones, gets them the hell out of the countries that they're in, throws them into America, avoids the tariff, and for the rest of the year, they sell those phones. So all they got to do is take, because Apple has the money to juggle. They're not worried about it. They just take 50 million phones that are in various warehouses around the world, get them all over to America before the next 90 days, before the tariffs hit, and they've got them warehoused in America waiting to roll out. And the rest of the world gets the other 450 million phones that are problematic. So Apple will be much less impacted than people think they are going to be. BHP, copper and stuff like that. So I think that'll be fine down the road. BP, and again, petrol, so they're being impacted by the lower gas prices. Caterpillar, I just talked about how Caterpillar is kind of screwed. Again, it depends on how the trade war goes, but if if China targets Caterpillar the way they're targeting Boeing, Caterpillar can be extremely screwed because there are many, many companies that do what they do. You don't need to buy Caterpillar. China can just say, don't buy Caterpillar. Same way they just said, don't buy Boeing to their local airlines. They can say to their local farmers and so on and so forth, don't buy Caterpillar anymore. Stop. Any other company. And what are people going to say? They're going to say, oh, okay. Caterpillar is great stuff. It's industry leading product. They make the best giant machines of anybody, but other people do make giant machines that you can buy instead of Caterpillar. So if your country says don't buy this, you don't buy it. Cisco, I think, is going to do great. So I like them long term, no matter what happens. CVS, Walgreens is like, Walgreens is in trouble, so CVS is an obvious choice. Delta, United just pulled their fat out of the fire. United just announced a very good earnings, and their outlook was pretty good. So I think Delta is going to perform very nicely now. Did I buy that back? I hope I did. What did I say about Delta? Let's buy back the short calls. Good job, Phil. All right. That was a good decision. It's 2 days ago. I forgot what I said. Disney, I don't think the tourism drop is going to be a problem for them because they can't fit this. There's more people that want to go to Disney than fit in Disney. They have to actually allocate their admissions. Certain you can only go to certain parks on certain days at certain times, blah, blah, blah. That's how tight they are with people. So not worried about Disney for the parks. Movies have very little to do with anything else that's going on. And the other thing they have is cruise lines, which seem to be going gangbusters for them. So I'm not too worried about Disney. Big loss on this one, but I still think it's a good position long term. Dow Chemical, again, terrible. Really got hit badly on Dow Chemical. I don't see why. I don't see why they should do so badly, but we'll have to take a long time before they get themselves back together. And IBM is eternal. IBM, look at IBM numbers. I mean, Jesus. So thank God for IBM, or we'd be screwed. But we made a lot of money on IBM. International Paper doing great because Trump just said, you see all these national forests that we have? Use those. Cut those down. What else do we have? All this is just a butterfly portfolio. It's crazy. Johnson & Johnson doing well. Coca, see all the greens. You know, you can't have all green because we sell puts, we sell calls, whatever. Coca-Cola is okay. They're balanced out. Levi, and again, it's you know, it's tariff issues and so on and so forth, but people need jeans eventually. Mattel, also another one where you say, okay, Mattel, they are more of a reseller than a manufacturer. I mean, somewhere they're making Barbies and things like that, but the reality is they're a toy seller. And they buy toys from all over the world and sell them. And so, like, let's say, for example, the toys that are on the shelf now that Mattel sells, other than the old times like Barbies and things like that, but the things that are on the shelf now from Mattel are not the same things that were on the shelf 10 years ago. Like where's the hula hoops, right? There's no more hula hoops. Tastes change, Mattel changes, they get the new thing. Kids are going to end up getting for Christmas whatever is available. So if things are tariffed out of existence, you're just going to go and get the next thing that isn't tariffed so much. Here's Newmont Mining. We just added that recently. I love them. They're popping. Pepsi is also too stable to ignore. More Pfizer. TD Bank, very undervalued, doing very well. TLT, we thought it would do better. It's, you know, it's being weird with the rates right now. Vale, again, also getting hit. Verizon, are you going to stop talking on the phone because of tariffs? No, so stupid. Here's Whirlpool again, and again with the loss, and we're waiting. And here's Exxon again, and again, we're waiting on that. So, you know, this is the thing. These are not bad trades. Even as I'm looking at them now, these are pretty good stocks. But you've got to be able to ride out that dip. And if you can't do that, if you don't have the hedges in place, if you don't have another source of money coming in while these things go down, and if you're going to be forced to sell if we drop another 20%, don't take the chance. When the market drops 20% more from here, we're going to have another $3 million from our hedges, and we are going to take that money, and we are going to, even though these trades are going to be horrifically bad, we are going to then start putting some serious money to work there, but it's going to be 2-year, 4-year time horizons, because that's how long it's going to take this thing to recover. But you know what? People who did that in 2008 made 5-10 times their money back a few years later. And that's what we're looking for now. We see this as an opportunity to buy a lot of good stocks cheaply. But if you're going to be forced to liquidate and take the loss and can't get back in, don't do it. Don't ride it out. It's not worth it. Even if you're down 20, 30% right now, you still got 70% to work with. You're better off with that. And then we can cherry pick really, really good stocks after this disaster has passed. And it could take several months. It could take all the way through the end of the year before this disaster stops. It just depends on how long these policies take to unwind the economy and what kind of global repercussions there are. You're at the opening of a war. It's a trade war. It's a world war with trade. And you don't know how bad it's going to get, and you don't know when it's going to stop. So for God's sake, if you're not very well hedged, really consider very hard whether it's worth taking a chance on this stuff. All right? Sorry it's not better news, but thanks everybody, and have a lovely weekend. We'll do this again next week, and who knows, maybe we'll have some stuff figured out by then. Don't forget Friday's a holiday too. Oh, wait, any questions, just in case? Do you have a good rule of thumb of how much our long-term portfolio should we be hedging? Notice that the STP always has hedges, wondering if I'm under hedge. If you're asking, you probably are. Cody, talk to me in chat. Be very happy to get into detail with it, all right? Thanks, everybody. Take care.